In this video, I'll show you what support and resistance actually is and how to identify strong support and resistance zone, and also show you simple rules to follow while trading support and resistance. So first, what is support? What is a support? A support is an area where price tends to stop falling and react upwards. In an uptrend, it is said that price is meant to create an higher high and higher low. Now, this point where we expect price to stop falling and react upward, this point is called your support zone. At the support zone, we expect buyers to come in and stop the market from falling. We expect buyers to come in to push the market higher. All right. At the support zone, buyers come in at the support zone to stop the market from falling and push the market higher. All right. Now, another way to also explain what the support zone is the floor of your house. The floor of your house. Let's say you bounce a ball on the floor of your house. The floor is supposed to stop the ball from falling, and the force of the floor is supposed to make the ball to react upwards. All right. So when you bounce the ball to the floor of your house, the force from the ball is supposed to hit the ground and make the ball to react upwards. This is a perfect illustration of what a support is. I hope you are getting this. Now, the resistance is quite the opposite. All right. The resistance zone is said to stop price from rising. All right. The resistance area is where price tends to stop rising and start falling. In a downtrend where we have a series of lower highs and lower lows, the resistance areas are the highs where we expect price to stop rising and start falling. Those highs where the reversal happen is called the resistance zone. I hope you are getting this. Now, a perfect way to demonstrate what a resistance zone is to throw a ball to your ceiling, to the ceiling of your house. Now, what you will notice is immediately the ball gets to your ceiling, the force of the ball and the ceiling tends to stop the ball from rising, and the force from the ball makes the ball to react downwards. All right. The resistance zone, just like the ceiling of your house, stops the price from rising and makes the price to start falling. It is said that sellers are active at the resistance zones. Just the way we have buyers acting at the support, we have sellers acting at the resistance zone. We have buyers acting at the support and sellers acting at the resistance. Now, while the buyers stop price from falling, the sellers stop price from rising. I hope you are getting this. I hope you are getting this. Now, support and resistance are not lines. Support and resistance are not straight lines. Consider it as an area or an elastic band. All right. It is not rigid. It is not a straight line. It is not rigid. Now, to identify a support or resistance level, you have to look for strong rejection from that level. Strong rejection from that level previously. There must be a rejection from that level previously, a previous rejection from that level. To see a valid support, there must be a previous rejection from that level, be it support or resistance. Now, if you have multiple rejections, better. All right, multiple rejections, better. Or at least one rejection from that level previously. Multiple rejection is better. All right. Now, the second thing to look out for is impulsive moves, which is still rejection. All right. Impulsive moves, meaning price wants to leave that place immediately. Price wants to leave that area immediately. All right, it must be a swing high or a swing low. It must be a swing high or a swing low. Remember, we said in an uptrend, we expect price to make a series of higher highs and higher lows. Now, these swing lows, they are your support areas. All right, and you can see how price rejected from that area previously. All right, now in a downtrend, where price is making a series of lower lows and lower highs, these swing highs are your resistance areas. All right, and you can see how price used this previous swing high to reverse. All right, I hope you are getting this. Now, how do you really identify support and resistance after knowing this? All right, how do you identify support and resistance? Now, the first thing is to identify the trend. If you cannot identify your trend, you generally make an error while marking out your support and resistance levels. The number one thing is to identify your trend. Now, this will help you and stop you from making several mistakes. All right, in an uptrend, once you identify your trend, and for instance, you see it's an uptrend, you want to mark out only your support zones. All right, in an uptrend, you want to mark out only your support zone. In an uptrend, you want to mark out only your support zone. Because we said in an uptrend, we expect price to use the lows and create an higher high. All right, we expect the lows to hold and the highs to be taken out. So in an uptrend, you want to mark out your support areas. All right, you want to trade in direction with the trend. You trade in direction with the trend, not against the trend. You trade in direction with the trend. So identifying your trend will make you avoid several mistakes, like marking out your resistance area to trade from in an uptrend. I hope you are getting it. Now, in a downtrend, remember we said we expect to see price making a series of lower highs and lower lows. Now, in a downtrend, you mark out only your resistance areas. Remember, in a downtrend, we said we expect the highs to be respected and we expect the lows to be taken out. In a downtrend, we expect price to take out the lows and respect the highs. In a downtrend, we expect price to take out the lows and respect the highs. So in a downtrend, you mark out only your resistance areas. In a downtrend, you mark out only your resistance areas. Now, you want to trade in direction with the trend. This rule applies to them both. In an uptrend, you want to mark out your support areas because that's where the buyers are interested in. The buyers are only interested at your support areas in an uptrend. The buyers are interested at your support areas in an uptrend. I hope you are getting it. In a downtrend, the sellers are only interested in your resistance areas. The sellers are only interested in your resistance area. I hope you are getting this. The first step is to identify the trend. Is it an uptrend or a downtrend? Is the market currently rising or is it falling? We already know the first step is to identify the trend so that you can trade with the trend, in direction of the trend. All right, now, once you identify the trend, the second step is to mark out your key areas. Once you identify the trend, the second step is to mark out your key areas. I already explained this previously, but I will explain it again. Once you identify the trend, the second step is to mark out your key areas. All right, your key area is your support or resistance zone. So once you identify the trend that you see, maybe price is currently bullish, what do you identify? Your support areas, because you want to be buying in a bullish market. All right, once you see price is currently bullish, you identify your support areas. And if you see price is bearish, what you do is you identify your resistance areas. You mark it out. Step 1 is to identify the trend. Step 2 is to mark out your resistance areas in direction of the trend. Step 3, you want to always trade in direction of the trend. Now, you don't want to mark out your resistance zones in an uptrend. Neither do you want to mark out your support zone in a downtrend. I hope you are getting it. I hope you are getting it. You look for buys in an uptrend. All right? You look for buys in an uptrend. You look for sales in a downtrend. It is that simple. You look for sales in a downtrend. It is that simple. Now, after you identify the trend, secondly, you mark out your key areas, which is your support and resistance zones. Next, you trade in direction of the trend. You have it at the back of your mind that you want to only trade in direction of the trend. So if the trend is bullish, you have no business marking out your resistance areas. Now, after you go through these 3 steps, the third step is to wait for confirmation. After you go through the 3 steps of marking out, spotting out the trend, marking out the support areas in direction of the trend, the fourth step is to wait for confirmation. Your support and resistance areas are just areas where you expect the buys to come from. They are just specific locations where buy might happen from. So you don't just trade it blindly. You don't just buy it because price is at your support. You must wait for confirmation. Either structure confirmation, candlestick confirmation, or indicator confirmation. Now, you don't just want to buy from everywhere. That's why you have to wait until price gets to your support. And when it gets to your support, you want to buy from the support. You want to wait for price to give you confirmation at the support zone. You wait for confirmation at your support zone. You wait for confirmation at your support zone. Same with your resistance. They are just areas where you expect price to sell from or buy from. You wait for confirmation. We have another video talking about confirmation. If you don't know how to wait for confirmation, we have another video dropping. If you check our channel, it talks about waiting for candlestick confirmation or structure confirmation. You can either wait for candlestick confirmation or structure confirmation. When price gets to your support or resistance, you wait for confirmation. Now, confirmation can be rejection, like rejection candles. It can be structure confirmation, like structure shift, and so it can be candlestick confirmation, and so on. Now, one of the mistakes beginners make is enter blindly at support or resistance zones without confirmation. This is not difficult. You only have to listen and wait. Because your support and resistance only helps you to understand where price is going to react. Your support and resistance shows you where price is going to react, where price is likely to react. Now, your trend shows you the direction of the market. Your trend shows you the direction of the market. That's why you need to know all this in order to trade your support or resistance. All right, and your confirmation helps you filter the entries. Your confirmation, that's why I said wait. You wait for confirmation at your support or resistance. Helps you filter bad entries. Now, let's dive into the rush chart and spot out our support and resistance zones. All right, right here we have this support zone. We have our support. You can see the rejection. You can see the rejection from the support. This higher high created an higher low that created an higher high, and you can see how price used that support again to create an higher high. This is also another perfect example of a support zone. You can see how price reacted from this support, broke from this high, and what the price do, came back to this low where price reacted from the support initially and used the support to create an higher high. Example of what the support zone look like. All right, this is an example of what the support zone look like. You can see price reacted from this low, and created a new high. You can see price came back to this low, and you can see the multiple rejections from the low. This is a valid support. And you can see how price used this low, broke out from this high right here, came back to use the low to create a new high. You can see the multiple rejections from that zone. Right? You can see the multiple rejections from that zone. High, higher low, higher high. All right, you can see the rejection from this zone and how price rejected several times from this zone. Use this support, broke out from this high, came back again to use this support. All right, you retested this support several times before failing. All right, we have several support levels. You can see price reacted from this zone, rejected. You can see the rejection. And once it's rejected, it broke out from the resistance. All right, you can see the rejection and break uptrend. And what the price do, came back to this support zone, reject again, and broke out of the resistance. All right. Good. So now the first thing to spot out is the trend. You can see it is going downwards. So what we want to spot out our resistance areas where we expect sales to happen from. All right. Now we have the previous resistance area here. We have the swing high here. There is a swing high right here. So this is where we expect price to want to reject from. All right. And you can see when next price visited that area, we saw this rejection from the resistance area and also structural confirmation about the shift. All right. And once price broke structure, you can see it came back to use that same resistance zone again. All right. And this time it retested it 3 times. All right. Remember what we discussed about spotting out a level. You must see multiple rejections. All right. And that is exactly what we are saying now. And it's a previous swing high. All right. Now, if you also look at these smaller trends, you can see resistance level right here. You can also see another resistance level right here. How price used a resistance area over and over again. All right. There are several resistance zones right here. All right. You also see this resistance zone. Price is rejecting from this extreme resistance zone. And what happened? Immediately rejection happened. We have price retesting that resistance zone over and over again to use for the sell. All right. You can see how price retested the zone, broke out from the support, we tested the zone again. You can see how the highs are being used to make lower lows. All right, you can see how the highs are being respected, and you can see how the lows are being taken out. All right, we have several rejections. You can see price is rejecting from this resistance. You can see how it rejected and broke out from this low, confirming the shift. And you can see how price used it again to reject. All right, you can see the multiple retest of that resistance zone. All right, you can also see how price took out this low, came back to use that same resistance area again for continuation, then came back again to use the same resistance area. All right. So this is what I mean by Support and resistance is not a straight line, it is an area. Now when you see this happening, you know these areas, there is a residing resistance zone in this area, and sellers are pretty much active to push price down when it comes to this area. So this is where you wait for your confirmation. All right, these are confirmation candles. All right, but I don't want to go into that right now. You can see how price came back to use this resistance zone, and you can see this is where we are getting those rejections from. All right, so it's really much simple. Once you understand your trend, you know you want to mark out your zones, direction of the trend. When price is bearish, you want to mark out your resistance zone on what. When price is bullish, you want to mark out your support. So you can see this resistance zone, how price rejected from this resistance zone, created the lower low, came back to test the resistance zone, and also rejected again. And you can see multiple resistance zone being formed right here. All right, you can see how price retested this level several times before the dawn. Hope you really get this. And if you want more videos like this, more breakdowns like this, feel free to subscribe to the channel and also like this video and drop your comments. And also we are dropping videos like this every week. So if you want more videos like this, subscribe to this channel and drop a comment on what you have learned so far on this video, or if you have any question.